Good morning, good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am 𝐂𝐎𝐍𝐈𝐎𝐍. This is the Crypto and Cognac Podcast Show, as always, live every week, 7 p.m. sharp Atlantic Standard Time. Accent over the live. Yes, not pre-recorded, not edited, raw dog. And with me there, any day, right? Guys, welcome to season 7, episode 5 of the Crypto and Cognac Podcast Show, powered by me, fueled by Hennessy, where we seek to decode this cryptic world of cryptocurrency in Caribbean terms, right? And you know how we do it in the Caribbean? We do lime dry mouth, right? So if me there, you there, Jinx there, right? Good afternoon. What are we talking about tonight? We are talking about what happens next, right? Because nothing has gone according to plan. Nothing has gone to script. Shout out to Stevie, always on the inside. My brother, Anil, big up yourself. Anon, big up yourself. Onika, big up yourself. Steven, big up yourself. George, big up yourself. Eddie, Keisha, everybody, right? And before we get into things, if you've been here before, you know how it goes. Me, I'm not a financial advisor. This is not a financial advisory podcast. Nothing that I share here this evening should be misconstrued as financial advice. It's all about the ICE rule. The same way we have our Hennessy's here is the same way we have our crypto conversation. Information, conversation, a little bit of education, a little bit of education, a little bit of education, right? That's what we're doing. I share with you, you share with me. Check out Stevie in the comments, right? And we having a time, right? As always, do your own research. And especially today, I want to reiterate, I am not telling you what to do next. I am telling you what I am doing next. I am telling you how I am seeing things. I am telling you what are the conditions that I am seeing that make sense to me, right? And remember to drink, drive, and degen responsibly. Yes, it's a crazy time in crypto, guys. So, jumping straight into it, right? This cycle is not cycling the way we accustom cycles to cycle, right? If you follow me there, this cycle isn't cycling the way that we have expected cycles to cycle, right? We haven't seen any Bitcoin blow off top, right? We haven't seen any structured alt season. We have seen some deep and grinding, one deep and grinding correction, which we're in right now, but we haven't seen the corrections and then they go back up and that kind of thing. We've seen a macro environment that feels more and more risk off every other week. And we've seen a market that seemingly can't decide whether or not it wants to capitulate or it wants to coil. So we don't know if we are disintegrating into a bear market or we just getting pumped up for that rocket to the moon blow off top. And because of this, everybody is in a position of where they're so concerned. I mean, we have a situation where I think as of right now, we're at around 87,000. The last number I checked, we were at 87,000. Let me just confirm that. Right? Yes, we had 87,800. Right? Fear and greed index at record lows, tens. I think it's about 10 or 11. Right? Despite the fact that we had 10 or 11, we still only at 87,000. Right? So does that mean that we're going to hit a zero on the fear greed index? Does that mean in order to hit 60 or 45, which is some people calling as the bottom, we need to, what are we going to do? Go into minus? I don't know. But today, I'm laying out a little bit of my strategy, how I'm managing my risk, what kind of things I'm doing to hedge my position, how I intend to deploy capital, and I think most importantly, some of the things, in addition to this thing, I'm going to use to stay even keel, to stay emotionally regulated during this whole process, right? Why is this cycle different to previous cycles? Well, be careful what you ask for because you just might get it. We asked for ETFs in the mix. We asked for institutional inflows. We got institutional inflows in the mix, but we also have institutional outflows that has created some, I don't want to say volatility because it's a lot less volatile when it was only retail, right? We wanted regulations. We have a macro environment driven by policy, which is basically acting like a brakes to a lot of the speculative money that we've seen come into the market before. We've seen a lot more real world adoption of crypto and blockchain. So in terms of the players and the playing field, it's a lot more level. And we've seen a little bit of a maturity in terms of the Bitcoin curve. So we are not seeing the kind of parabolic blow off tops, but that is exactly what we asked for, right? What we wanted when we talked about adoption is inevitable. And I don't think we're at the place where we had full adoption. We're not even near close. But these are some of the things that were to be expected when we asked for the things that we asked for, right? So what does that mean? The tops less explosives. The corrections might be a little bit more prolonged. Rotations from Bitcoin into major oils, into oils for all season are slower. Liquidity shifts are more deliberate because we have more, not just institutional players, but more think BTC continues to range. I think between, especially since we've come down to 87, I think we continue to range between maybe 103, 105, and maybe 85. That is unless we see some major Fed cuts, unless we see some major ETF inflows, unless we see another significant sovereign nation announce their participation in the space like El Salvador did. I expect us to continue to range and go sideways for a bit, right? I think alts will continue to have a more muted experience this cycle. I don't see there being any significant narratives driving the alt space. We had the AI narrative earlier this year. We had the meme coin narrative late last year. And, every cycle is kind of defined by the alt narratives. I'm going to touch on one narrative that I think that even if it doesn't come this cycle, I think next cycle it's going to be a big narrative. And that's one of the areas that I will be kind of accumulating into and doing more research on. But I think even though we don't see a full explosive alt season, we will see a bit of success for one or two players. I think we're going to see select winners. I think we're going to see one or two people have really good performances, as we saw like Zcash and those privacy coins doing well. I think we're going to see a lot more of that instead of this kind of market-wide boom type of experience that we used to in these bull markets. I personally, this is not because I spoke to anybody or anybody is saying this. I think now is a great accumulation phase. And the reason why I think so is because this period where you're unsure of what to do, that kind of mini recovery, that kind of, I don't know if to put money or not. The whole market seems scared, even though things don't look that bad. I think that speaks specifically to an opportunity for accumulation. I think it was Warren Buffett who said, be greedy when everybody is fearful and be fearful when everybody being greedy. I think now kind of is speaking to me in that way. And I think the problem with accumulation phases in general is that when you're in it, it doesn't look like it, right? It doesn't feel like it. And you end up waiting too long. So for me, right now, I'm trying to assess the market from an accumulation phase. But also I'm looking more long-term. I'm not getting into anything that I'm uncomfortable either losing my shirt on or that I'm uncomfortable holding for the next 3 to 5 years, right? So it's not just looking for the quick win. I think right now, especially as I said, because things are so choppy, because BTC is ranging, because BTC dominance continues to go up and down, I think cash and BTC are king right now. Well, not cash, but stable coins, right? Are king right now. So for me, my deployment is maybe 60% in BTC. Or that is what I expect my portfolio to kind of look like over the next few months. About 60% in BTC, about 10 to 15% in Solana, maybe ETH a little bit, although I find ETH has really underperformed, and I'm very hesitant about Ethereum. I want to be cash heavy. I want to have 20% in stable coins, awaiting some kind of black swan event. They're calling for a global financial crash. They're calling for a crash in the stock market. I want to have some liquidity if or when that happens. And then, like I said, I want to be in a few long-term positions, people who also I feel, will do well over the next 3 to 5 years, that are going to be strong performers. Either they have strong fundamentals. I'm looking for projects that generate real revenue and not just, these Ponzi scheme type structures. And people who have real communities, who have real traction, who have real world utility. So for me, that is kind of how I am gonna build out my portfolio. And even with my stable coins, I absolutely will not be deploying all my stables at one time. I'm not going all in on anything unless there is a major, like I said, black swan event. In the interim, I doing 10% at a time. So, you know, I mean, if I have $20, I'm going to put $2 today, maybe $2 next week, $2 the week after that. Now, if something significant happen, I might deploy the $10, right? I might deploy 10 out of the $20 one time. But otherwise, I intend to protect my liquidity and my cash reserves as much as possible. The fact is, BTC and ETH ETF exposures are going to continue to grow. We're going to see more traditional investors get involved in that space. Reason why I'm looking at Solana more than ETH is because I know that they have some Solana ETFs coming. I think based on their performance and just the volume of attention that that network has, I think it might be a little bit more interesting for investors who are coming into the space. Real world assets, anything connected to real world assets, whether it's, you know, gold backed coins or real estate backed tokens, you know, NFTs that are aligned with real authenticating real assets. That might be something I might do a little bit more investigation into and learn about a little bit more during this period of sideways movement. Of course, I think AI still has some legs, even though I do think that generally the AI bubble is blowing kind of big and we might see it pop. I think not the AI meme coins, but I think there's still a lot of legs in the AI space as it relates to storage, as it relates to execution layers, as it relates to data availability. And I would say those are longer term plays. So again, 3 to 5 years, 5 to 10 years type of thing. Of course, DeFi, anything where I could access some passive income, earn a few dollars on my stables while I have them on the side, but at the same time always having access to them. If a narrative is really, really strong, I might buy a lotto ticket. There might be a project that I decide to degen into. Yes, I'm still open to those things, right? I'm not too big to place a bet, but I'm doing this with the expectation and the awareness that this is a lotto ticket. This is not strategy. This is hit and hope, right? But like I said before, during this period, I think the most important skill that you need to learn, you need to develop, you need to cultivate, you need to train, you need to exercise is not your trading skills. It's not your technical analysis skills. It is not about researching narratives. I think right now, the most important skill you can learn is emotional patience. Regulating yourself and your emotions through the highs and the lows of the market. I think that's the most important thing that you can do during this period. Do by the euphoria, right? Don't capitulate to the fear, right? Don't be buying high and selling low. Don't do it. And don't underestimate how long we might be going sideways for. At the end of the day, like I said, the focus should be play the long game, right? I playing the long game. I'm not telling you what to do, right? If I can't see myself there in 2029, 2030, I'm not getting involved unless that is a lotto ticket, like I said before, right? So right now, BTC, some Sol, decent chunk of stables, 1 or 2 alts. And I told you all before I got into it, there's one area that I think, one narrative, one area that I think is gonna grow and have some success. It's a area that I've been looking at for a while, and it hasn't, to be honest. I thought it would have kicked off in 2021, 2022. It didn't, right? I thought it would have kicked off in 2025, 2026. It hasn't yet. But I think oracles are going to be a big, big player for the next 10, 15, 20 years in this space, because at the end of the day, for everything to run on the blockchain, we need that validation layer from the real world to the blockchain. And I think that's where oracles are going to play a huge part. So for the next few weeks, I'm going to spend some of my time, some of my energy curled up with a drink researching oracles. And that's the real. I might have some dust from some oracles that I was invested in before. That probably looking like some sense right now. Hoping to be able to dust those off and see them do something in the near future. But that's one of the areas that I plan to look at significantly. So that's it for me. That is what I will be doing. That is where I will be focusing my attention. Tell me, hit me up in the chat, hit me up on social media, whether it be Twitter, Instagram, YouTube here. Let me know what you're looking at. Let me know what you're thinking, right? Because I think we're still early. I don't think we're gonna be getting rich off our dollar investments like previous cycles, but I think the opportunities in crypto are still very significant in terms of wealth creation if you apply a little bit of emotional discipline and DCA, right? So that's my time. As always, thank you for being with me. You could have been anywhere in the world, but you're here with me. I appreciate that. Steve-O, shout out my brother. Big up on yourself. Guys, see you all next week. Same bad time, same bad channel. 𝐿𝐿uminati out. Be blessed.